Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is Friday, February 8th, 2013. And a little bit of action today, and a little bit of action all week this week. Some much-needed correcting in the currencies. The euro today down about 38 pips right now. We have pulled back most of the week and are down now to what seems to be a support level. This level right up in here should hold us off. We had some pretty good consolidation back there, and this was also some highs down in here, so we're about there. Maybe a little bit more on Monday's session. We fall off a little bit, and then we'll probably come bouncing back, bounce around a little bit in this area. Eventually we need to test these highs, so we're not going to have any real significant type of downturn unless we test those highs. So at some point we'll probably do something like this back here. We'll bounce around for a little while and then go up and test those highs and then come back down and get to this trend line. On the weeklies, well, this week as we can see, it's quite the down week, the biggest down week we've had in a long time. So shagging out the market here, cleaning it up a little bit, hitting some stops, and looks like we'll probably then next week maybe bounce around here a little bit, and then we could start to maybe move back up after a while. Get that consolidation going. For the month we are negative, which is actually healthy because we've been up for 6 months in a row, so one down month here is not really all that bad. Still is not a whole lot of momentum here on the longer term, and longer term this market is still pointed down, so really don't expect us to get any kind of huge momentum here to the upside, but certainly a good correction here longer term. Now, British pound against the dollar, quite a wild week. We are up 88 pips today. We were down quite a bit earlier in the week, and now recovering back. So I have drawn in this channel here, and we're just slightly above it right now. More than likely we'll fall back here. We could jump up to this 158.90, 159 area and bounce around there for a little bit. Looks like with the stochastics we are starting to turn up, so we could have a little bit of correction, which would widen this channel out and would actually be healthy for a longer term sell-off. On the weeklies, first up week that we're having here in the last three. So certainly a needed bounce, and we are bouncing again off of this trend line that we have many times here before. So really looking like maybe we'll get one more week of a bounce, a slight bounce, and then it'll sell off. We just need to close down below that trend line, which is right now about 156. So about 154.50, 155 a week. A close there on a weekly basis would be very, very bearish and would sell us off. Now on the monthlies, well, we're still down on the month, and we got quite a bit of ways to go here in time factoring here to really start selling off again. Now if we close the month out, which is still another 3 weeks away, we would have to close the month out at that 154.50, 155 area. If we did that, that would be very bearish. So right now the way it looks, if we close the month this way, it would actually be kind of positive, and we would bounce up from here. So we still wait and see on the longer term here, but ultimately it looks like we're going to head lower, and that's just because of this big sell-off back here and then this consolidation. US dollar against the Swiss franc, we had more consolidation at the beginning of the week, and then yesterday quite the rally up. Today we're down about 2 pips, up 2 pips depending on your quote service. So looks like we'll probably turn the corner here, run back up. I have a little bit of a trend line in here, so this is what we need to close above longer term here so that we can really start an upward movement. 93.25 area is about where it's at right now, so every day that ticks a little bit lower, but we need to close decisively above that before this market will rally up again. Now on the weeklies, we got a similar line in here. We were up above it for a couple weeks, and then last week sold off quite strongly and closed down below the lowest lows that we've had recently. Now this week we're popping back up. We're just on that trend line. So we're going to have to wait and see how we close out next week, but it is looking better. It's still consolidating. For the month now, we are positive. This month we really need to close positive, and we need to close above last month's highs. Otherwise we're going to find more difficulty here into March. So really looking forward to this market doing something that will indicate that we're going to turn around here. US dollar against Japanese yen down a little bit today, down about 75 pips. Much needed. We're starting to consolidate up here. It looks like we'll probably consolidate, maybe down another day, Monday session, and then probably a thrust to new highs. Now, longer term, this market still looks very strong. Some comments coming out of Japan that maybe it's moved too much too fast. The thing there that I'd have to say as well, be careful what you wish for, because you might just get it. And in this case, I think they have gotten it. They've turned the market around. They've turned the market sentiment, and now nobody wants to own the yen. So very, very possible that they have started something, and it's going to do what it's going to do. We did pop up just above 94 one day this week on an intraday basis, but we need to close above that to really give this any type of meaningful correction here, and we didn't do it this week. So it looks like we could run up next week probably to this 95 level up in here. Maybe then we could see a pullback. Now the monthlies still looks very, very strong in the monthlies. Have to see how we close out the month, but my guess at this point is that we're going to close the month up somewhere up around the 95, 96 level. That's the way it's looking. There's no indication that it's going to turn around and go down from here. Euro Swiss having a rough day and a rough week. A lot of volatility. Today we are down about 38-40 pips depending on your quote service. Pulled back fairly nicely now. Very much like we've done these last two times, only at a much higher level. So here we are again. Really looks like this is probably starting to base out here, and we're probably going to work our way higher from this point. Now if we look at the weeklies, we can see how the last 2 weeks we've been negative, last week and this week, and we might get one more week where we go down a little bit, and then we'll thrust up to new highs. But overall we still look very strong. This is the lows. That's going to hold. We know that the SMB's in here to stop it at 120. So there is certainly a lot of pent-up changing momentum here, and it's going to turn everything around here shortly. Now ultimately we're looking for this thing to run up to about the 130, 132 level, and we could get there very, very quickly once it starts moving again. Euro yen pulling back, same as the dollar yen. Euro yen today down about 140 pips, back down to around 124. Been bouncing around there. Now this is the third day down for this. We're showing some pretty good consolidation here up at this high level, so it actually looks like we'll probably have maybe one more session lower, and then we'll probably start spiking up again. Again, they're trying to stabilize the yen's fall, but I think they have started something that they're gonna they really can't control now. So in addition to that, the euro, they're trying to calm the movement of that as well. The European Central Bank and some of the finance ministries saying that it's just gone too far too fast, which it probably has, but that doesn't mean it can't go further. And this level around this 127 where we stopped this week, we need to test that level, and we'll probably do it here in the next week. More than likely we will exceed that level and keep going. There's no reason for it to stop right here, and as we can see here in the weeklies, we ran up to this level back here, which is kind of a little bit of a resistance level, just about 128 area. So we have pulled back. This will be our first negative week in about 7 weeks. So very, very good that it is pulling back a little bit. Next week now I would anticipate us to run right back up, and we're going to get some volatility first before we do have any kind of meaningful correction. So this may be the start of that volatility, but more than likely we're going to rally up and make some new highs next week. and it would not be surprising to see this market run up above 130, even though with this 138 way up here. So there is certainly enough momentum here to do that, and we could do that within a couple of weeks actually. Now on the monthlies we are negative for the month, but again we still have about 3 weeks left here, so a lot can happen in that time frame, and ultimately we'll probably end the month positive. As to how positive we don't know yet, but it still looks like we're going to do that. So the market is kind of taken off on a life of its own here. The euro being strong, the yen being weak, and it's kind of a double whammy for this cross. So still like it. It's just very, very volatile. If you're going to play this market, you got to be prepared for 500-600 point stop losses in there. Of course, you got 500, 600, 800 pips that can be made on the upside. So the risk is very high, but the reward is also very high. So it is not the market for the faint of heart, that's for sure. That is it for this week. If you are not a member of FX Addicts, please stop on by, and we do offer a 7-day free trial. In addition to that, I am available to answer questions at any time. You can email me or get me on Skype, FX Addicts. I also take phone calls, so that everything can be found on our website at www.fxaddicts.com. Look forward to talking to you. Thank you.